Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. So as usual, we have prepared the vehicle report, and this time, guys, it has, well, appeared to be a little bit larger than it was last time, just because lots of events, especially in politics, stands around the market, and actually it's difficult to separate right now politics from the economics because everything just involved in one amount of factors that actually make impact on all markets together. So I have tried to keep it short, but there's some moments that we can't ignore, and it's mostly related to possible steps and decisions that Biden administration could do in the nearest time, and that Jerome Powell could do in the nearest time, and all this stuff makes impact on gold. In general, we do not see anything surprising in the gold performance right now, because it totally corresponds to our long-term view. In the beginning of the year, we told that when the crisis will come and Fed will keep rate to fight inflation, so gold will appear under pressure. So we just need to be patient and wait when this process will be over if you intend to get the rally on the gold market. At the same time, those of you who think about accumulating on the physical gold, we suggest the current dip is a nice opportunity to add more to your physical bullions, coins maybe, and gradually keep buying, because we think that this process hardly will be over very fast. At least the half of the year we will not see any rally on the gold, I suppose, if even it stopped dropping as it's like a stone, as we see right there. But to turn back to the rally, it needs to get some preliminary conditions. So we have described them in today's report, so you could read them. And this is long-lasting process because it actually suggests the big political events, and hardly it will happen earlier than in the middle of the 2024. So we should be prepared for long time of the pressure on the gold. Maybe gold will not just keep dropping, it could stand flat or turn to some sideways action and wide consolidation, but definitely will not be able to show the big jump. So it doesn't mean that we will not get any chances for buying or taking the long position, because this is long-term perspective, and on lower time frames I suppose that will be lots of chances. But it's just in general, since we're talking about the longer term perspective. So that's what about the fundamental things. So on the lower time frames here, context remains bearish, but at this point we can't take the short position on the daily and higher time frames, because if you will take a look at the monthly chart, you will see that market is challenging yearly pivot point and 1835 nearest monthly fib support. As this level is accompanied with the daily oversold and market is forming bullish, potentially bullish butterfly, this is butterfly buy, despite the strong action, it potentially creates the chance for a bounce, not maybe the reversal, or at least for the pullback. Although it is a different question how strong the technical factors works right now, and how strong they will be, and whether it will be totally depressed by the fundamental background. But at least by the technicals, it suggests that for taking the new short position on the daily and above time frames, we need to wait for retracement to let market abandon oversold and to show some pullback here. And that's what about high time frames. On the lower time frames, we could consider taking the short positions, but anyway, we need to get some pullback, and our nearest target will be current lows, just because our soul stands right there, and we can't hold the positions through the oversold. We need to out at the previous lows this market has formed. So that's the major logic currently. At the same time, second important point to our trading plan is that we have to care about possible bullish patterns. This is the first one, but as you can see, it's larger scale. It's really big. Now we have to worry about what could happen actually around this level. So yes, we could take on the pullbacks and selling the rallies on the intraday charts, but at the same time we have to keep an eye whether these possible pullbacks will not turn into some bullish patterns. For example, if we'll take a look at the hourly chart, you could see that here we have the 1618 extension down, and it potentially might be the head and shoulders, which could become the starting point of something greater. So this is what we need to keep an eye on as well. It means that our trading plan looks as follows. So with the pullback and moving out of the oversold on the daily to some resistance levels, we could take the short position. So market starts moving, we could trade it, aiming on a possible target right around the previous lows. But if somehow we will see that something different is starting to going on, for example, market starts to form head and shoulders, in this case it would be better to close shorts and see what will happen next, because other factors suggest that the pullback might be. Because this is not a joke, this is seriously. We have the monthly fib support accompanied with the daily oversold and huge butterfly pattern on the daily chart, which is, as you understand, for a monthly chart, this is just some kind of the preparation for the possible pullback. It's the same as we're watching minor butterflies on the hourly chart when we're talking about the pullback on the daily. But just imagine the scale of all this stuff. So that's why we have to really care about the possible signs of the bullish patterns around it. Besides, finally, as you can see that on the daily chart, we have pretty nice thrusting down, and that's itself might be the background for potential patterns around this 1835, 1840 area. So that's what we have currently on the gold market. So at this point right now, we do not see any good background for taking any position, because for taking long position you have nothing, you don't have any patterns. For the taking the bearish position, it seems a bit risky, just because market actually mostly has done the target and stands deeply oversold. For any position you have to wait for clarity. For the bearish position you have to wait for a bounce. For the bullish position you have no choice but to wait some clear bullish pattern. So that's what we have currently on the gold, and see what will happen next week, because market hardly will remain in tension of the oversold for too long, and it's most probable that somewhere next week we should get some clarity and some setup for trading.